Grace Dawes, editor of Movement, and I'm joined today by Paul Smith, COO and co-founder of DigiSure. Thank you so much for joining me today, Paul. It's really great to meet you. Can you tell me a bit about DigiSure, your position in the company, and how the company as a whole fits in the world of mobility?
Thank you, Grace. Yeah, I'm happy to join you and talk about DigiSure a little bit. And so just a little bit about DigiSure. We are a technology platform that came into being to help mobility platforms and insurance carriers work together more cooperatively. There's a lot of insurance functions that the carriers expect the mobility platforms to conduct. And conversely, the mobility platforms expect a lot from the insurance carriers. And that is always not one and the same. So our platform does a number of different functions, including screening, policy administration, and claims handling. And that helps keep the whole mobility platforms operating efficiently and sustainably.
Great. And can you also tell me a bit about some of the symptoms coming from insurance challenges? How does this present in vehicles particularly?
So what we're super excited about is there's so many new mobility models coming to market with lots of great innovation. However, a lot of these companies just think, oh, we'll get insurance as one of the last things to do before they launch. And they don't have any understanding of how hard it is to get insurance in this space. And so what we like to do is try to help companies understand the risk problem and make that something that can be managed. Because one of the first realizations is the insurance can quickly become one of the most expensive costs of doing business for these platforms, more so than they ever imagined. I think the initial assumption would be that you kind of can translate your personal auto insurance rates into these mobility platforms, and that's far from reality. These are often 3, 4, or 5 times more expensive on a per usage basis. So it's very important to understand that, one, there's going to be high costs, and you have to take a lot of proactive measures to try to keep that cost to a minimum.
Yeah, so when you say insurance, some companies kind of leave insurance as the last step of before they're launching or before, they're conducting some sort of new launch for something. Well, is it more of a first basis kind of thing, or does it need to be in the middle? Because I know from what you're saying, I kind of understand that you use insurance to unlock more potential in businesses. Where would you kind of put it in the field of beginning a business in the mobility field?
Definitely somewhere in the middle, right? I think on one hand, you might say as soon as possible, but if you don't have your business model fully thought out, you don't have your projections, you don't have your operating procedures in place, you don't have your terms of service written out, your broker and your insurance partner is not going to be able to accurately assess and price your program. So I think you have to have a lot of fundamentals built out first. But once you have that, I think as soon as possible from there would be best, because it can take months to actually get that program put together.
I see. So it's more of kind of a foundation, not necessarily the base foundation, but a big foundation to build off of for a business.
Absolutely. Yeah, but you can't go to the insurance markets and say, like, I have this idea. Like they need the specifics to be able to understand your program.
I see. And I know that DigiSure as a company talk a lot about loss ratio, and that's a term that I'm not personally very familiar with. Can you outline for me what this is and what can influence that ratio?
Sure. So loss ratio is determined by the cost of your claims relative to the amount of insurance premium that is being generated. Obviously, you want to keep that less than 100% because then the program would be losing money if it was over 100%. In the insurtech space, though, the loss ratio is kind of an interesting concept. And as you look at the insurance industry, insurtechs have kind of gotten a bad label here because loss ratios are often very inflated. Some of the bigger brand name insurtechs that have had explosive growth have also had loss ratios that are sky high as well. And over the course of their subsequent years, they're working on bringing that down under 100%. DigiSure, on the other hand, because we've built our technology platform to keep loss ratios manageable, we've had to sort of prove our own worth, and we've kept our programs at very favorable loss ratios since inception, and we continue to do so with better technology and better screening and more refined insurance programs over time. So we think it's very important to keep that loss ratio down because that is going to be the #1 driver of getting your ultimate cost of insurance down, and that's what everyone wants to see.
I see. So when you say that some companies who do so well actually have really high loss ratios, how does that kind of end up presenting itself? So you say it can increase your insurance. Is that the only way that it can present itself?
It's definitely the most important driver of your cost of insurance is going to be your loss experience. So the better you can proactively do to minimize the cost there will result in more favorable pricing for your program. Absolutely.
I see. So it's a bigger issue than it seems, you know, because companies might have a big loss ratio and not even realize it, but it does end up presenting itself. Is that kind of what you're saying?
Yes. So sharing your loss ratios, if you've been in business previously, is one of the key ingredients into getting a quote from a carrier. So they're going to understand how you've performed. I think a lot of folks kind of think like, okay, once I have my program in place, any claims that occur are the insurance partner's problem. And in that moment, sure, that's correct, but it's going to come back and get you. So if you have a lot of expensive losses, guess what? You're going to be paying for that in your renewal. So you want to be proactive, keep that minimized, and hopefully you can go back and actually get a discount the subsequent year. DigiSure's been able to do that for a number of our partners. We've gotten as much as a 20% reduction in year 2 of a program based on our initial results.
I see. And 20% is actually quite a big amount when it comes to big businesses in the mobility field. So I understand it's very important. Lastly, what can we expect to see from DigiSure at Move America? I know that, Paul, you are just joining a panel. Can you tell me anything about that and what you'll be discussing, maybe things that you'll hope to bring up or hear in the panel discussion, and personally what you're looking forward to at the event?
Sure, yeah. So we're really looking forward to joining the conference. With regards to the panel in particular, we're going to be thinking about profitability in shared mobility. And I think there's a number of different strategies that we'd like to mention within that. So number one, getting your cost of insurance under control. Secondly, keeping the bad actors off your platform. So because everyone knows the 80-20 rule, which applies to pretty much everything in the world. But within insurance, there's also sort of like a 2 and 20 rule, which is to say that 20% of your losses are driven by 2% of your customers. And if you can better identify that 2%, save the 20% of those losses, your program will look completely different to the insurance markets. And then the third part would be to actually turn the insurance program, which is generally thought of as a cost, into a revenue generator. So you can actually turn your insurance program into something where you're keeping some margin and making money off of it, as well as funding your insurance program. So we think a combination of those strategies can lead to sustainable transaction economics for all of these mobility platforms.
I see. Well, that's definitely a panel I'll be trying to attend. It sounds like there's a lot to say there. But thank you so much for joining me today, Paul. It's really nice to meet you, and I'll see you in Austin.
Thanks for having me. See you there.